Hi, it's Larry Gaines from Powercycle Trading. Well, it's Sunday, Super Bowl Sunday, and it's getting close to kickoff time, but I thought I'd put out this video beforehand and give an overview of the market. There were a lot of breakouts today on the markets overall. But before I get started, if you've not received my free ebook, please go to powercycletrading.com and just put in your name, email address. You'll get 15 top option trading strategies, and then you can also get my E-mini futures ebook. Let me show you that. So go to powercycletrading.com and just look for a free ebook tab right there. Click on it, and you'll get this downloadable trading E-minis. Name, email address, and you'll get it right away. So today I'm going to start off though with showing you some gold trades that came about on Friday using the trading system. Now, Friday, it was a pretty fun day. We had some really good breakout trades, very selective. We try to, our motto, let trades come to you. One of our members, Doug, is a big fan of that, and it really works. So we use the trading model, Powercycle trading model, and we let the trades come to us with the model. And this is just one member, Will, who's a just fantastic gold trader. This is kind of a usual type of day for him, but you can see here he said he just finished trading gold futures and he was up 2,300 contracts, and we were saying, man, what an awesome day, great job. And his usual comment is just as per this PowerPoint right here, Larry, it's all in your indicators. I just follow them and push the buttons to execute. And he's absolutely great at execution. So using our trading model and great execution and confidence in the model, you can get great performance. Now, let me go through, just show you some of the trades real quick here on the gold that were on Friday, and I'll do that right now. Now, at Powercycle Trading, we've got a trading system that we've developed for all of our trading, day trading and swing trading, and it's been pretty much automated on the Thinkorswim platform. So we've got a lot of great automation that's been done by one of our charter members, who's a fantastic trader and programmer. But I just wanted to point out a couple of the trades based on the model. This was gold, and this was on last Friday, the 1st of February. And the first really great trade came at 7:30 Central. Right here, it was a buy right there. Caught this explosive move up, and these are some of the trades that Will got into. And then here's another great trade that came in about close to 9 o'clock. Great trade for a short trade here where these arrows are. You can see the timeline right there. And then another trade right here, another short and another short. Those were just some very selective trades based on the trading model. So now I'm going to go through and show you some of the other markets and some of the breakouts, but if you'd like to learn more about the way we trade, please come visit us and come in there and join us for the Powercycle Trading virtual trading room. Get one of our trading models and courses and learn how we do it. Now, one more really cool tool that we've developed is a scanner that can scan futures or whatever market you're trading and look for what we call momentum type breakout trades. And so we have certain conditions in our trading model, and we've had those programmed into a scanner on the Thinkorswim platform. And so we can go through any futures or ETF or stock, and we can look across different time frames, like here's 5 minute, 15, 30, 60, and we can go in there and look based on our parameters to see what is setting up for a potential breakout based on the conditions that we've programmed into our model. So here's just one. You can see here crude oil. Here's crude, and you can see here this number 1 indicates that on the 15-minute time frame there's potential for it to break out, and the color code indicates that it would be potentially to the upside. So we have this color coded. So red is indicates down, green indicates up. So here is a crude oil. Here's the 5-minute time frame, and you can see here that you can see where this particular what we call a squeeze started taking place right here about 6 in the morning, and then it broke out. The yellow dots indicate the direction of the potential break, or the yellow and the purple dots. So here it was indicating purple, which means up, and yellow means down, and you can see it caught this move down. So that's just one part of the model, but it's a big part of it. So I wanted to show you that. Now you can see here something starting to set up is for a 5-minute and a 15-minute and even the 60-minute is cotton. If you're trading cotton, you can see this. This is on a 5-minute time frame, and you can see that it came in really narrowed in here, and indication was to break to the upside, and it did with the purple dot. So this indicates when it's starting and gives us an indication alert that we might be ready for a potential breakout trade to the upside or downside, and then we can home in on it and use the rest of our model to execute the entry. So I wanted to point that out. Let's see here. Here's one more on crude oil that I just noticed. Scan forward a little bit, pull it forward here. So you can see here it's a very, very tight range, so it's going to break up or down here, coming into the morning probably session of the 4th of February on Monday. So this is post-market, very, very, very tight range, and something's going to happen. So this indicates us to that, and we can use it across any asset class or stocks or ETFs for that matter. We just go in here and select what we want to look at. I can go to let's see here, I'll go to Nasdaq 100 stocks. Let's pull that up real quick. The high beta stocks are the really good ones for this. So now it's scanning, it's doing its loading to see what's coming up, and let's see what we have on a 5-minute time frame real quick. So I can pull up and look at everything, and I can sort it by time frame or by alphabetical. And it looks like this might be a good one here. Let's see what this is. This is O'Reilly Automotive Parts, and you can see it's really narrowed in, tightening up, so it's looking for a potential breakout, but this is post-market, so it could change. But just kind of wanted to show you this and how this tool can be used. Here's Amazon, for example, and it's really starting to get a tight range here, for the 5-minute, the 15-minute. Let's pull up to 15. We can shift time frames here. So you can see here it's starting to consolidate, squeeze in, and the purple dot indicates that it directionally may be looking to break out to the upside. Now we also have automated in here trend lines that are automatically drawn, and we can put those in as well to help give directions to where the breakout will occur. So this just puts something up on our radar to, let's keep an eye on Amazon. We might get a nice momentum breakout come Monday morning. So we can use this to scan and find these particular trades. So now I'll go through and show you some of the broad market, what happened on Friday and what we're looking at for Monday. Now just a quick overview here. Here's the weekly time frame for the SP 500 cash. Our cycle model is currently long. We've been long based on our trading model since basically the first part of January, and this is on a weekly time frame. You can see it's really breaking to the upside. Now Friday they had the Non Farm Payroll Report come out, and it was a little bit worse than expected, which was interpreted as good because then the Federal Reserve will keep pumping money into the system. So the market liked it, and we got a nice boost and made a new high on the SP 500. So we're moving up to historic highs. Well, I couldn't say historic, but highs back from the 2007, 2008. We're getting close to that. I'll show you those real quickly on a monthly. Now here's the monthly time frame for the S&P 500, and the macro trend. We've been in a trend based on our model since the January 2012, and you can see here it's butting up against this this parallel horizontal, not horizontal, but this extended trend line, the top of it. And markets tend to like symmetry, so you're starting, here we've been saying we've been getting toppy, but the market keeps racing higher. So when you get into these kind of levels, it either breaks and it separates, like here. You can see the symmetry, how it held on this trend line that as it was established and moving higher, and then it finally broke out and had this massive move to the upside. So this is a potential where it could break and really accelerate, or else it's going to pull back, consolidate and keep the move up, kind of a zigzag, So anyway, the next main resistance really comes in about 1548, 1550, and then the all-time highs are up at 1576. So the market's moving. There's not a lot in front of it to push it back right now. You're going to have some ongoing discussions coming up here, in March, April, about the debt ceilings and stuff like that, because it's been kicked back until May. But right now, the markets are trending higher, and the trend is your friend. Now, if you remember last week, I kept talking about the Nasdaq 100 futures here in Q consolidating sideways. So it had been just chopping around between this range of 2747, 2705 in here, and not able to break out, while the rest of the markets, the S&P futures, the Dow, transports, were moving higher. And so I talked about last week that going into Friday, on Thursday, that it would either break out to the upside or downside based on the Non Farm Payroll Report. We had this wedge coming in. This is a classic setup here where price keeps moving in, squeezing in, and then breaks, has to break, just the pressure of it pushes it either up or down. And here it broke to the upside. So look for the Nasdaq to start moving out to the upside at probably a better pace now, because we've had this inverted head and shoulders. Here's your shoulder, head, shoulder, and this was your neckline. So the measured move from here to the neckline puts the Nasdaq 100 basically target back up here at around close to about 2850, 2855. So that's a target based on this measure move of this inverted head and shoulders, and you can see how it's broken out now. So I would look for it to, it usually will pull back, retest where it broke from, and then this will become support, and then consolidate some more, take the next leg up, or it could accelerate even faster. But this was, this took, for it to break out, it took it a full month to finally break. And this really, I think, will have an impact on Apple as well. So I'll look at that, and then I'm going to go get ready for the football game. Now here's Apple. Now Apple, with the NQ showing signs of moving higher on that breakout, if that is going to start trending, that's going to add a little bit of wind to the back of Apple. You can see Apple's been stuck in this range as well, 465 down to 436, but it's holding, it's been holding this 450 level for about 4 or 5 days. So the longer it can hold back above this 450, you're starting to see it wedge in as well. You've got this trend line descending, an ascending trend line here, so it's wedging. So it's either going to break above or break down. Now our model right now currently has it to the upside, and if we get a little bit of momentum with the broad markets, I would expect to see Apple start testing this 460 level where it tried to last week, and then if it can break through 465, it's got a big gap area in here, and you could have a potential target up to about 480, 483. So good luck trading on Monday. I'll talk to you Monday after the close, and hope you enjoy the Super Bowl game tonight. It should be a great game. Talk to you tomorrow. Oh, one last thing. We're going to have a Thinkorswim. We're going to have a webinar on February the 13th, and it'll be at Wednesday night at 7 Central to about 8:15, and it'll be a webinar covering a lot of the great ins and out features of the Thinkorswim platform. So I hope you'll sign up and join us for that.